Welcome to this Radian Timely Topic video. We are going to provide you with a Q&A session with one of our National Training Managers, Jeff Engel. We wanted to ask Jeff a few questions to get clarification regarding some of the changes to the 2018 IRS tax forms relating to income calculations and the impact to the mortgage industry. Jeff, thank you for taking the time to discuss the changes to the tax forms and the impact to the mortgage income calculations for self-employed borrowers. I've been hearing some concerns about the changes, so let's discuss some items like the 1040 personal returns and the 2106 form.
Hey Nicole, thanks so much for having me on with you. All of what you mentioned are very hot topics. Our team has been receiving a lot of questions and emails from folks in our industry about this. I want to start with a very important piece of information regarding self-employed tax forms and income calculations. Very little has changed. I repeat, we saw very minimal to no changes to self-employed income tax forms or income calculations. Hopefully now everyone can sleep a little bit better tonight. Let's play a quick game to prove my point. You remember those games where you had to find the difference between the two pictures in front of you?
Yes, of course I do.
Alright, so let's play that game. Tell me, what is the difference between the IRS Schedule C sole proprietor tax form from 2017 and the one that you see from 2018?
I really don't see any difference except for the date at the top.
Exactly. It's only the date on the IRS tax form Schedule C that has changed from 2017 to 2018. There is one additional minor change, but again, one that won't impact the way that you would review your loans or calculate income, and that's on 2018 line 24. It now states deductible meals instead of deductible meals and entertainment. All the other line items and numbers all remain the same. Alright, so let's play this game again. This time we're going to look at the IRS Partnership Tax Form Schedule 1065. What do you see that is different?
It's just the date again. Okay, Jeff, now you really have me convinced that nothing has changed in the business returns for the sole proprietor Schedule C and the Partnership 1065. I think I get the point.
I know sometimes seeing is believing, so I wanted you to see that there are really no changes. There's one minor change to the Corporation Tax Returns 1120. They have an extra page. The Schedule L is now located on page 6 instead of page 5, but all the line numbers, they look and remain the same. And before you ask me, the GSEs have not made any announcements to change Fannie Mae's Cash Flow Analysis Form 1084 or Freddie Mac's Form 91. After all, both of the forms only cover self-employed income, and as you just learned, nothing has really changed on the tax forms.
That makes sense. So what is it that I'm hearing regarding the changes to the unreimbursed business expenses on the IRS Form 2106 and the guideline changes?
That is an important change, but one that is not related solely to self-employed income. If any loan officers are listening, pay close attention to what I'm going to say. Fannie Mae announced on December 4th, 2018 that effective immediately that they updated their guidelines to reflect that you no longer are treating commission-based borrowers' income differently. Almost no borrowers can write off the unreimbursed business expenses on their taxes, so you shouldn't have anything to subtract out of the income. The DU findings are going to be updated in March of 2019 with a new release to reflect the guideline changes. Now, a commission borrower who did not qualify in the past may now qualify with this change. I always say that yesterday's denial could be tomorrow's approval if you keep up to date on the guideline changes.
If the 2106 form will no longer be completed, how will that impact the way we look at automobile allowances?
Nicole, that's another great question. So in that same December 4th, 2018 announcement, Fannie Mae stated, as a result of the tax law changes preventing a lender to identify unreimbursed expenses, they are removing the 2106 requirements and changing the automobile allowance policy. The full amount of the automobile allowance will now be included as income, and the lease or financing expenditures will be included as a debt in the calculation of the debt-to-income ratio. A history of receipt of the income is still required.
Just to recap Form 2106, the IRS no longer allows most positions to reduce their taxable income by unreimbursed employee business expenses, resulting in Fannie Mae changing their guidelines. Because if someone can't reduce their income to the IRS, then the mortgage industry can't reduce their qualifying income.
Exactly.
So, Jeff, I know my next question is not related to self-employed income and probably has nothing to do with the calculation changes, but can you tell me what did change on the personal 1040s?
Of course, Nicole. Let me walk you through it. The IRS divided the old 1040 into schedules so a basic W-2 wage earner can file a very simplified tax return. Technically, it is that postcard that we've heard about. If you print it out, then cut off the white space on the paper, W-2 wage income is going to be on page 2, line 1 of the new 1040. That is really the biggest change for something we look for in the mortgage industry. W-2 wage income is no longer on line 7, page 1. On the 1040 Schedule 1, the IRS didn't even change the line numbers. So if you had them memorized, there are no new line numbers to remember except for the W-2 wage income I just mentioned being on page 2 of the new 1040 on line 1.
Thank you for all this great information, Jeff. I hope this eases the concerns of many listening. Thank you for taking the time to listen to this Radian Timely Topic video. If you have any questions regarding MI or the tax returns, please contact your Radian account manager or the Radian customer help team.